Alright, what is going on, guys? So this week I wanted to do a video on just some basic things I look at when I look at the charts. I showed you last week how I scan for the stocks. This week I'm going to kind of walk you through the first things I do after I get a stock that I've scanned and I think might be a little bit interesting. So the first thing, I'm going to pull up some of the bigger names here. First thing I do is I just pull it out, big screen. This will load. So I pull out this is the 5-year chart, this is a longer chart. So here, the 20-year chart, just to see what the trend is like, right? So this is Apple. Just had like a nice little pullback here the last few days. Just to really get an idea of which way the market is sending this stock, any stock that I'm looking at. So it's Apple, here's Tesla, same sort of thing. Had this move up, kind of traded sideways, and then had another move up. And then some of like the penny stocks here, BCR, pull it down to the 5-year. Started at 27, just been kind of running down. Had a bottom here at 67 cents and just trading sideways. So just get an idea of this is kind of on a down, just kind of been stuck down here. AEMD, 5-year chart, had this big run up, a few weeks here, and then pulled back down and kind of just been bleeding out sideways here. EYG, same sort of thing, opened up here, had a big move up, pulled back for a few weeks, and then just been trading here under $5. And then AIRI had this move up to 13 and traded kind of above 10 here, and then just kind of been bleeding out back down. That's a lot how the penny stocks kind of go. They just kind of bleed out and just kind of stay under $5 for a while. Okay, so now that we know how the chart looks, we can come sort of into the lower time frame. So we'll start with EYEG here. So this is the daily chart, and you can see since about September, it's been trading sideways, right? So it comes down to this $1 area, except for this little dip here, $1 area, runs up to $1.30, pulls back to $1, up to $1.30, kind of just doing this over and over and over. So what that means is the support level shown here is about $1. If you can get in a little bit under $1, 97, 96, would be amazing. The reason I say it's amazing is because let's just say you get in at $1. It drops to 90 cents, 89, you stop out. You're out 10 cents. If it moves back up the way it has been in the past, it's a potential move for 30 cents. So the reward to risk is 3 to 1. That's something I look at and I like there. Especially here, it looks like it's finding a bottom, so potential entry close to $1 for a move up to $1.30 for me. Another one, AEMD. So this one so trend lines don't have to just be sideways, they can be upwards. So this one is top here, top here, top here. So it's finding tops here on this trend line and finding a bottom, sort of a bottom, and another bottom here on this bottom trend line. So on this one, I would look to enter on this bottom trend line on the support, potentially stop out under $1.15 for a potential move up, right? So if it continues back up, we're looking for, let's just call it $2. That's a potential 60-cent move for a potential 15 to 20 cent loss. So another 3 to 1 reward to risk ratio. So buying on the support, selling on the resistance. Another one, AIRI. Been trading sideways here for a while. This 130 area has been a nice support, really just trading between 130 and 150. Sideways here. If you can buy near 130, it's a nice support area for a potential move to 150, and then recently just broke out of those 150s and has made this down trend line here back at this support level. So really you're just drawing lines, connecting the candles to find where the price cannot break, where the price is holding. So right now it's been holding this 130 area, potentially down to 115, so that's 15 cents there, for a potential move back up to this 160, 150 area, another good reward to risk ratio. Same thing works on the larger cap companies. Apple here, Apple here. So it hit a top here, hit a top here, and now again hitting another top here. So could potentially see a bigger pullback sort of down here. Not sure if that's going to happen, but that's the potential here. So it has these tops here, nice strong resistance level here, and they've had some sort of bad news the last few weeks, so that didn't help, and bringing it back down. Tesla, another one here. So here, it's been trading sideways here between 300 and 380, with this 340 sort of being like a decider here. So every single time it breaks above this 340, it generally tests the 380 area. Pulls back down. Once it breaks down, comes down to 300, bounces off the 340 here, sort of pulls back. Once it breaks it again, it bounces off the 340 and makes its way back up to 380. Same thing here, bounces off, pulls back up. Once it breaks through, it finds its way down to 300. Bounces here, pulls back, finds its way up, so potentially a move coming here to 380 off this 340 again. So just finding these sort of patterns here can help you, limit your risk and improve your potential upside. So ECR here is the weekly chart, finding resistance, finding support around $2 is an entry I took late last week. Bounces off this trend line here, back down here, bounces here, looking for a bounce here for a potential move back up to this trend line. So just finding these support and resistance lines can help you with your trading, and you don't want to be buying for essentially this one. You don't want to be buying at the resistance, you want to be buying at the support. All right, so next what I wanted to talk about was, so you can't just look, especially for swings. For day trades, momentum, you might just be in and out in a few minutes, so it's not as big of a deal, but you want to look at some fundamentals just to get an idea of what the company is like. Especially with the penny stocks, they're usually not the greatest companies. So go to Finviz, same site I use for a little bit of scanning. CLRB, one of the stocks that I entered into. So we'll just do a little quick search here for them. So first thing I generally look at, so it pulls up the chart here, and down here it gives you some information, some news about them down here. The first thing I look at is the float, mainly just because that's 14.18 million shares outstanding. It's not always 100% accurate, but it gives you a good idea of how it can move. So $14 million can be traded, because the dollar stocks make $17 million can be traded with this stock without changing hands. So that shows that this thing can move quick with volume coming in. So that's important for me to know. So if something news comes out, this thing could skyrocket. Bad news comes out, it can dump hard. So you have to know sort of the float and how many shares are outstanding. The short float shows how many shorts are in here, so it's fairly high. Could definitely be higher, but 7.7% is a decent amount of short interest. So people pushing it down. So same thing, if it gets squeezed up on a low float, it could rocket with shorts trying to cover. Here you can see the book value per share, cash per share, just to give you an idea of sort of where their financials stand. We're going to go in a little bit more in depth in that, and give you some information here about the financials and different ratios and stuff like that. One of the main things I look at here is the float and the short float, and the rest I'm going to actually look at the financials for. But just to give a quick glance, this can be good. So next, generally what I do is I can look here, CLRB, for the biotech stocks, biopharmcatalyst.com, and this is going to show me a little bit of information about the stock, news, SEC filings, chart here, and stuff like that. But what I'm looking for is this drug information. So this shows they have one drug in their pipeline. So if this goes bad, it could be very bad for the company. So it tells me some information. Phase 2 initiation announced March 30th, 2017. Expansion of trial announced December 6th. Enrollment of their first patient just happened a few days ago on January 29th, 2018. So something to keep on watch. Most of the other biotech companies have multiple different things in the pipeline, and you can sort of see where different things are along the way. Another nice thing here is you can see sort of like the upcoming, you can see the upcoming sort of information that some of the biotech companies are going to come out with. So there's just a list of all these different, it's not just penny stocks, it's all different stocks and things that are coming out for them. A lot of them have run-ups, especially the penny stocks, into data. So potentially something to watch for as a run-up. I don't usually hold any for the actual news, but just a potential run-up. So this is a nice website, biopharmcatalyst.com, just to get some information about different biotech stocks. So once I've checked that out to see sort of where they are, I go here to the SEC website, pull back out here, SEC website. I can go here, search the ticker, CLRB, search, and it pulls up all their SEC filings. I pull up the last few 10Qs. I have them pulled up here. Another Form 10Q, and this is going to be their quarterly financial statements. So the couple main things, but the main thing that I'm watching here is this cash. A lot of these penny stocks, especially the biotech companies, they're just burning through cash, and they're not generally making very much money. So cash can be a big issue. It causes dilution and reverse splits and just bad news sort of for those biotechs. So what I'm looking for here is this cash number over the last few quarters. So March 31st, 2017, 11 million in cash. June 30th, 8.3, and September 5.6. So what that's telling me is about 3.3 million a quarter is being spent in cash. So their burn rate is about 3.3. Also, what you want to look at, sometimes the cash can go up. You can look down here. There's a lot of different reasons, but one of the main reasons could be because they diluted. So we can look here. Shares issued and outstanding March 31st is 13.4 million. And we look down here, 13.4 million that's for June 30th. And we look down here, 13.4 million for September 30th. So they haven't issued any more shares. So cash is going down about 3.3 million a quarter. So what this tells me is we've got about another quarter and a half. So this quarter ends at the end of the year, so could be getting a little tight here on cash. So that's something to keep in mind in terms of your risk tolerance for potential dilution or different things coming out like that. So just something to keep in mind, because the cash is really important for these biotech stocks. So another thing I look at is the long-term liabilities. You need to see if they have any long-term debt. For this one, it just looks like they have some deferred rent. No like long-term debt, and it's only 142,000. Another thing I like to look at is their current assets over their current liabilities. Current ratio, it's about 3 right now. 6 million, 6.6, and 2.1. So it looks pretty good there. They can pay off their short-term liabilities fairly easily. They're not going to be super tight on cash and current assets. What else here? You can look down at the cash flow statements for more details about where exactly the cash went. Generally, I just look, quick here at cash numbers over a few periods, just to get an idea, unless I'm really holding this for a longer term, which I generally don't do with the penny stocks. So yeah, those are some things that I look at. This website is really nice here for anybody into those biotech stocks. It gives you a lot of information. You can look for potential run-up plays into data, so different things like that. So just to go back here quickly to the the charts. I mean, this is the main thing about charting and technical analysis, is finding support and resistance, right? These technical indicators and moving averages and stuff like that, they're awesome, but it's mainly about the price action, right? So the price is finding support here around $1. You don't want to be buying at 120 to 130 because you're buying into the resistance. You want to be buying closer to the support level. Potential loss is down here. Potential gain is the big move up. If it breaks out and you sold at 132, 33, no worries, you can buy back in a little bit higher. It's okay to miss out that part, but you don't want to be buying here at 130, 135, bounce off the 135 and come straight back down to $1 and you're down 25% just like that. So keep those things in mind. I mean, that's how you win with this. You don't have to make 100% in a day. You make 3, 4, 5% a day, a week even, and it compounds over time. So you want to buy near support, sell near resistance. It can be on a trend line like this. Buy near support, sell at resistance. Over and over and over again. That's all it is. You can use the moving averages as potential support levels and resistance levels. That's what I do. You can use different RSI here. So you can see there's a resistance here and a support area here. So kind of support. So you can be here. Oh, it broke support here. Yeah, potentially it's showing potentially a move down, but it's still holding support on this actual price trend line. So just different things to keep in mind. I hope this helped. As always, if anyone has any questions or any comments, concerns, any ideas of different things you want me to do next, please let me know. And I hope you guys enjoyed this video and learned something from it. See you guys on StockTwits.